Well, a very warm welcome to everyone, and welcome to our webinar on Vietnam, Powering Ahead into 2021. This is our third webinar this year, and what a year it's been. I'm Craig Martin, I'm chairman of Dynam Capital, and I'm joined with my colleagues, Tin and Tan. Dynam is a Guernsey-regulated fund manager, and we're the fund manager for Vietnam Holding. Vietnam Holding is listed on the main board of the London Stock Exchange with a market cap of about £77 million and a net asset value of just over £100 million. The fund is invested in a high conviction, concentrated portfolio of Vietnamese equities. We have about 24 holdings, and we have no gearing. And the fund has been a very early adherent to ESG, environmental and social governance. It's been a signatory to United Nations Principles for Responsible Investing for over a decade. And we take that very seriously through every stage of the investment cycle. We're a partner-owned firm. We're an active manager with a locally based team of 12 people in Vietnam. And we're investing across a few core segments of the Vietnam story: the industrialization themes, the consumer and urbanization, and underpinned by a strong preference also for the financial services sector. Today, we'll be talking to you for about 20 minutes, and then we'll have 10 minutes for Q&A, so hopefully short, sharp, and sweet. And after I've set the scene a little bit, my colleague Tan will be talking about the macro position in Vietnam, why it's strong today, and how we think that's going to power Vietnam into 2021. And then Tin will talk about the equity story, the prospects, the capital markets for 2021, and importantly for our portfolio as well. And then we'll have time for questions and answers. Well, we've got a large number of people from all over the world joining us today. Thank you very much for that. Welcome to you from wherever you are, taking time out of your busy schedules. I know there's lots of pressing issues around COVID in Europe and the UK, so we appreciate you joining. We'll keep it short and sweet. But as we've got a lot of people joining from different places with different familiarities to Vietnam, spend a few minutes just to put everyone on the same page. Much of this will be very familiar to those who have been keenly following Vietnam this year and over many years. Some of it may not be so familiar. Vietnam's a large population, 100 million people, a young population, ethnically homogeneous, a very cohesive society. And that's been one reason why Vietnam's been so successful in combating the coronavirus this year. And we've had a number of webinars where we've gone into that in greater detail. The experiences of Vietnam in dealing with other diseases, avian flu and swine flu and SARS back in 2003 have helped. But I think really it's the people pulling together and with the government and the authorities taking decisive action and people listening to instruction and following up on that, which has really helped. And as a result, Vietnam's emerged after only a few periods of lockdown in April and then again in August when there've been waves of coronavirus. And today it's kept it very much under control and the economy has rebounded as a result. Vietnam's economy has been growing at 6 to 7% for the last 30 years on average. This year, the number will be lower. It's 2.5%, we think, for the full year. But that's a positive number, and there are very few countries in Asia, or in fact in the world, with positive GDP. Historically, that growth in the economy has been underpinned by foreign direct investment, which has been at record levels last year. And then this year, we've seen a continuation of the theme of what's been dubbed China Plus One, as manufacturers in North and East Asia look to diversify their manufacturing base to Vietnam to balance risk, to perhaps position themselves against trade tariffs and trade wars, and also to optimize their supply chain. Vietnam's also a very big trading nation. It's a very open economy, 200% of its GDP through imports and exports. And it trades a lot with the US. That trade's been going up over the last 12, 18 months, but also to China and to South Korea and Japan and countries within ASEAN as well. Not only is Vietnam a key part of many multilateral trade initiatives, it's also very skillfully and adeptly negotiated bilateral agreements or free trade agreements, most recently with the European Union. And that's getting a lot of attention as a good model. And in fact, Dominic Raab earlier this month came out from the UK. He visited South Korea and then he visited Vietnam, the two places he came to in Asia. And in Vietnam, it was probably to look at doing a copy paste of the EU's free trade agreement to get something done before Brexit and before the end of this year. But more importantly, perhaps than that, he came out to Vietnam to seek help. Vietnam is a core part of ASEAN, the Association of Southeast Asian Nations, and has been a member for about 25 years, a time when it also normalized trading relations with places such as the US. This year, Vietnam is the chair of ASEAN, and so has quite a lot of influence and say. Dominic Raab was probably also trying to get Vietnam's help in joining clubs that Vietnam's are in, but particularly including Pacific trade alliances. Somewhat ironic for perhaps the UK, which faces the Atlantic the last time I looked, but notwithstanding that, why not join a Pacific trade alliance if you can? So the GDP growth on the back of that strong FDI, the foreign direct investment, and the trade surplus, the export base, is something that in a few minutes my colleague Tam will take us through, but it's not all about trade. It's also about Vietnam's strategic location. If you look at the map, yes, Vietnam's part of ASEAN, Southeast Asian nation, but it's also along coast facing towards East Asia and North Asia. And it's a very pragmatic partner in dealing with multiple kind of global alliances. Japan is a very important part of that story too. And the first country that the new Prime Minister of Japan, Suga, visited was Vietnam, talking trade, talking economic cooperation, talking probably geopolitics and security as well. And then we had Raab, who I mentioned. And then lastly, today we have Mike Pompeo in Hanoi visiting Vietnam. So yes, he'll be talking about trade. The US wants to export LNG and agricultural products to Vietnam, which is great. But also they recognize they need friends like Vietnam in these chaotic times, and with perhaps the US and China still with war of words over trade and other matters, Vietnam is a very interesting and very important geopolitical location for the US to have friends in. So I think Vietnam is very much punching above its weight. So to hear more about the macroeconomic position for 2020 and how that's going to power ahead into 2021, I'll hand over to my colleague, Tan.
Yes, thank you, Craig, for the introduction. Yes, I'm very happy to update the macro situation of Vietnam until now and also the outlook for 2021. Yes, after the COVID-19 was under control at the end of the third quarter of this year, the GDP growth of Vietnam strongly picked up in Q3. And this is picking up very substantially in October, making Vietnam among a very few countries achieving positive GDP growth in 2020. And the outlook for 2021 even more promising. The government target the GDP growth for 2021 at 6%, but in our opinion, it is still quite conservative compared to our forecast and also the forecast of a number of international organizations, as you can see in the chart. How could Vietnam that resilient? Now let's review the key growth driver of Vietnam. The first one is the trade. In Q3, Vietnam is an exceptional case in the global export market, with the export growth of more than 10% compared to a deep down in many other competitors. And this is attributable to the diversified export market and also export products of Vietnam. This is very diversified, and the export were strongly supported by the key growth driver in Vietnam for the last few years, is the manufacturing sector. We would like to give credit to the government for controlling the COVID and also for supporting the sector during the COVID-19 by supporting FDI enterprises. The sectors already get back to the normal level before the COVID-19 and is already in expansion mode by the end of the third quarter. And we believe that the sector will be very promising in 2021, given that it will benefit further from the increased FDI and the relocation of some China capacity that Craig already mentioned in the first part. And the second critical growth driver in Vietnam is the domestic consumption, which decreased sharply in April during the lockdown of the country during the COVID, but it's already recovered to the normal level by the end of this quarter, especially in October. It's already was up more than 6%. And many other economic areas of Vietnam already get back to the normal level, except for the two sectors, tourism and travel. And this is understandable because there are some restrictions on international travel. We expect those sectors will recover later. And in 2020, the investment activities of Vietnam is not very busy. The same reason is because of measures. However, in 2021, the outlook would be very promising. FDI this year could down about 20%, but we expect the number would get back to the normal of 2019 and increase about 20%. Given the position of Vietnam for receiving more FDI in 2021, and also because of the China Plus One strategy that Craig already mentioned in the first part. For the public investment, the government already committed to disburse about $22 billion in 2020 and also 2021. It's not only because they want to revive the economy quickly after the pandemic, but also is the commitment to disburse, to accelerate the public investment, especially in infrastructure, to catch the opportunities that of the trend of the FDI, and also to improve the infrastructure of the country. So we are very positive for the investment activities of Vietnam. And those key growth drivers in 2021 will be supported by the healthy balance sheet of the country, and also because of the healthy banking system. Until now, thanks to the sustainable export growth, the trade surplus of Vietnam already hit the record high of $17 billion at the end of September. And the low interest rate environment will create the room, will allow the government to continue its easing policy in 2021. So what about the currency? Yeah, it's another beauty for the balance sheet of Vietnam in 2021. The FX reserve of Vietnam already hit the record high in history of more than 5 months of import, thanks to the trade surplus and also the stable FDI inflows. We expect that the currency will be stable toward the end of this year and also in 2021 and onward. Yes, we are very optimistic, and we are even more optimistic than a quarter ago, given the numbers and given like the sustainability of the recovery trend of Vietnam. Now, I would like to hand over to Mr. Thinh to talk about the equity market and also about the Vietnam holding portfolio.
Thank you, Mr. Thai, for the promising view of Vietnam 2021. And we are now moving to the equity market. The COVID-19 is really a big event to Vietnam, as the market had dropped deeply during the lockdown period in late March. Up to now, the market performed well as it bounced back nearly to the level before COVID. If we take a longer view, we can see that Vietnam market is still in a long-term uptrend, reflects the growth of economy. On valuation, we can see that the PE forward of the VN own share index is at 10 times when other markets such as Thailand or the Philippines at around 20. In the same time, the ROE and ROA of Vietnam markets are higher than that of the other market in the region. Now, please come to Vietnam holding portfolio. As introduced earlier by Craig, Vietnam Holding is a closed-end fund which holds a concentrated portfolio of Vietnamese equity. From a portfolio perspective, our key investment themes are still intact, regardless of the COVID. We are taking a long view of the company business with ESG consideration when making an investment. We believe that our investment themes, including industrialization, urbanization, and domestic consumption, are the key driving forces for Vietnam to grow in the next 20 years. We build up our portfolio around those key mega trends with focus on the companies that have good compounding long-term earning per share growth based on their sound business competitiveness, strong balances, good management, good practice in ESG, and our estimation of our portfolio in 2021 is PE at 8.5 times and earning per share growth at about 21%. At the end of September 2020, our weight of industrialization themes was about 39%. Urbanization was 21%. Consumer was 14.8%. And the rest was banks. There were some changes in the weight of those investment themes in the last 6 months as we did some portfolio rebalancing during and after the COVID. In the last 6 months, we totally divested our investment in oil and gas, garment and textiles, and reduced our exposure to retail sector as the impact of COVID. In the same time, we increased the industrial services and banking sectors. In the industrial services, we increased Hoa Phat, a steel-making company, from about 2% to now at 9%. And Jamdet, a logistic company, from 2% to now at about 5%. In Hoa Phat, we saw a strong earning growth of the company this year and also next year, as the company benefits from the acceleration of public investment in infrastructure, including new roads, new ports, and new bridges, and the recovering job economy, particularly in construction and real estate sectors. At the same time, the company also newly launched a fully integrated steel complex, helping it to gain 33% of the market share this year from about 20% just about 4 years ago. We estimate that its earning per share growth would be between 25 to 30% growth this year. However, the company did even better than that. The company profit after tax growth in the first 9 months is already at 56% comparison in last year. We believe that earnings of the company can continue to grow next year also at about more than 20%. And when the valuation of the company is still at about 8.5 times. In the last 6 years, we also add more weight on banking sector. We see that some selected banks resilience with COVID in 2020s and can have strong growth in 2021 when the valuation are still reasonable. Most of our banks, most of the banks in our portfolio would have earning per share growth of about 7% this year and would be more than 20% growth next year. If you look at the top 10 portfolio, you also see that we also have reduced FPT, leading IT services company in Vietnam. we still love the company. We see that these benefit from the COVID, and we also estimate the earning of the company will grow about 10 to 13% this year. But we reduce it to reduce the concentration risk with some premium. That's a snapshot of our portfolio and our preparation for the recovery of the economy in 2021. Our approach is to be engaged with the portfolio company and help them on the journey to be better in reporting, better in corporate governance, and better in the environmental practices. We think our portfolio is well positioned for the continued recovery and growth of Vietnam. With that, I would like to hand back to Greg. Thank you.
Well, thank you, Tin, and thank you, Tan, before. So just before we come into some questions and answers, perhaps just then to pull that together into a very short summary, as Tin alluded to, we think Vietnam's macro is going to support that powering into 2021. It's in a very enviable position in terms of its regional peers in Asia. And although the flows of that strong macro take time to show themselves in the stock market and in equity values, we think that there's good growth for 2021, more than 20% EPS growth, and yet an undemanding valuation today of looking forward to next year about 8.5 times. Vietnam Holding itself is listed on the London Stock Exchange. People can buy and sell its shares to take advantage of the prospects for Vietnam. And interestingly, perhaps the fund actually trades at a discount of about 25% to its net asset value, despite all the growth we see in Vietnam and in the portfolio. So maybe it's something interesting for investors to take a look at. We'll come to some questions. There's a question around currency manipulation. I think it's a very timely question. As Tan pointed out, Vietnam's currency has actually been very stable over the last couple of years. If you look back over the last 30 years, it's been a trend of depreciation of about 2% per annum. But the last couple of years it's been quite stable. And because of this China +1 and the trade war, Vietnam has been exporting more to the US. And as it does so, it goes up the ranks of contributors to the US deficit. So the US has been active going after a number of countries, Singapore, I think, Malaysia, Vietnam, China, about currency manipulation, which obviously gets taken seriously, but most countries obviously refute that, as Vietnam has done. I think the important point around these kind of statements from the US have to be balanced by the fact Mike Pompeo is in Hanoi seeking to build those relationships, but also seeking to generate more US exports to Vietnam, particularly in LNG, which is cleaner than coal, cheaper than coal, and is something the US has plenty of. So I think over time, there'll be balancing forces to that. So we don't see any immediate risk, although it's something that we keep a close eye on. There's a question about MSCI frontier market. So I think that's an important point as well. So Vietnam has all the characteristics of an emerging market, and yet per MSCI is still a frontier market. It's the second largest constituent, and it will become the largest constituent of that frontier market as Kuwait gets a promotion up to the Premier League. So over the next 12 months, Vietnam will move to close to 30% of the frontier market. So we think that will see, an inflow of $300 or $400 million of additional overseas foreign capital to the stock market over the course of the next year, which I think is positive. Obviously, the big game changer of when will Vietnam be an emerging market remains to be seen. It's making all the right steps, but that's still a long time away. But clearly, interesting that it'll be the leading player in the frontier market. We have a question about how does the banking exposure fit within the themes that we have? So the themes that Tin and Tan have spoken about, industrialization, urbanization, and domestic consumer. The banking sector almost kind of underpins each of those. It's the lubrication, it's the support to those sectors. And as Tin mentioned, actually Vietnam is underbanked. Less than 40% of the population have bank accounts. So with that consumer growth and consumer spending of $3,000 or consumer per capita GDP of $3,000, as Vietnam goes on that inflection point of a consumer society, banking is going to be increasingly important. As the country further industrializes and trades more and builds its infrastructure, then the banks will also play a role in that. So not all of the great story in Vietnam is captured in the stock market, but most of the story and the great story of Vietnam and its growth is captured in the banking sector that's providing the financial fuel to that. So by increasing our exposure from 8% last year to close to 20% this year, gets us, we feel, better positioned for that. There's a question around discount to NAV. So as I said, discount today is 25%. Someone's asked about the tender offer. So Vietnam holding, today actually is holding its, one of the items there is for approval to conduct a tender for up to 15% of the shares at today's NAV. So the board of the fund, very independent from us, the manager, they're cognizant of the fact the fund does trade at a discount. So they have a number of measures, tools in their arsenal, including share buybacks. And then also every couple of years, they've gone back to shareholders to get approval for tenders. There's one happening today. So that may well also be a tool to narrow the discount. It also provides a nice return to investors. That tender is at 2% discount to NAV versus, you could trade it in the market at a 25% discount to NAV. So we think that's positive. Other steps to narrow the discount to NAV, the share buybacks, obviously also communicating the story about Vietnam. We think it's a very strong story. The macro is strong. We think 2021 is going to be a stellar year. And so us as the manager, in conjunction with the board, want to tell other people about the good news of the Vietnam equity story and how they can access that through Vietnam holdings. There's a question around the banking sector and profitability in a lower interest rate environment. Tin, do you want to just talk very briefly on the banking sector?
Yeah, thank you. You may know that the banking sector and also that the Vietnam economy itself that gone through a very serious restructuring in the last 5 years. And actually that the earning of the bank that improved significantly in the last 2 years already. Look at the earning in 2019. Most of the good banks in Vietnam have earning per share grow at more than 25%. Even some banks, some good banks can have the earning grow at 35%. So this year with the COVID, that the bank at the moment that, I mean, in the beginning of the COVID, the bank is in very position. I mean, when capitalized, when organized, and it looked for us that they are resilient. And this year that we estimate that most of the banks, they have lower income, but they still have the earning per share grow at about 7%. So we see that that's one thing. Number two is that, as Thanh said, next year that that Vietnam economy will have very strong bounce back. And banking sector, especially the good bank in Vietnam, can have very good benefit from that recovery. And we estimate that some bank that we invested in that will have the earning per share grow more than 20%. So that's why that we made decision to increase our exposure to banks. In the same time that banks in Vietnam is a really large sector. I mean, that's something like a 24% of the index. And in the beginning of the year that we are underweight them. So we need to increase our weight in banks also. The question also mentioned about the lower interest rate. We watch those events that very closely. In the last 2 quarters that the NIM of banks that still going up. I mean, some banks, they maintain their NIM as 2019, but some banks even increased a little bit. So the NIM depend on banks. That is something like between 3.5 to 4 or even about 5%. So that's pretty good. And we see that the spread is still okay in the in the last quarter of this year and beginning of the first 2 quarters of next year. So we see that there is potential risk for incomes of banks, but at the moment that we watch them very closely.
Thanks, Tin. There's a question about elections, and thankfully not about US elections, about Vietnamese elections and Politburo elections. I think the short answer is Vietnam is very firmly on a course of pro-business, pro-trade, looking to support its large growing population through domestic investment. So I think the only outcome from that will be perhaps clearing the decks for more investment in terms of domestic infrastructure, which has a multiplier effect. And I think, you know, the new mandate in Vietnam to the people at the Politburo level, but also any other provincial level changes will be to further accelerate disbursement of that investment. And it also probably removes some anxieties or uncertainties about approvals on real estate projects. So I think that's going to be positive. There's a follow-up question around the tender. The circular that was sent out early part of the month detailed that proceeds from the tender on the shares would be in the middle of November. And someone's asking, should shareholders buy more after? Yes, absolutely. If it's right for your portfolio, if you like the position that Vietnam's in and the powering into 2021 and the economic growth and the forecast growth in earnings of next year, then I think Vietnam Holding is a very nimble fund. Concentrated portfolio is an excellent way to access that. So I'd certainly encourage people look at that and do their research around that. There's a question I can't ignore, which is coming from a former colleague, a friend, around the strong macro, accepting that and looking about COVID. Yes, COVID is rapidly reshaping many economies. I think Vietnam is obviously aware of that. It's adapted domestically. It's also looking at the trends of digitalization. One of our largest holdings, FPT, provides digitalization not only to Vietnamese companies that want to hold their AGMs virtually, but to Japanese banks and to Fortune 500 companies. So Vietnam has some strength and players that will be beneficiaries of a post-COVID world globally. I think what we need to keep a close eye on is the changing demands from the West. Vietnam is blessed with a very broad mix of goods exports and trades, so you know can shift and adapt accordingly. And as we mentioned, that shortening of supply chains, I think, is also going to benefit the kind of manufacturing clusters and hubs that Vietnam's built up over a number of years, and we're seeing tremendous amount of investment and interest in that. So yes, we are aware. We do look at, you know, looking at our portfolios, Tin has said, and making adjustments and rebalancing. But we see that this is the long-term trends of the domestic story in Vietnam are very robust, and we want to make sure we're positioned to play through that. There's a question around foreign premiums. We didn't really touch on that today, but a number of the stocks in our portfolio are at their foreign limit. We hold them and we value them at the local stock price, but there are a queue of foreign investors wanting to buy them from us. And actually in our rebalancing, we've been able to take advantage of that and take some profit at a healthy premium to the market price around that. We think, you know, those premiums, they change, they fluctuate. And I think it's evidence that people are very interested in some of the strong components of the Vietnam story and do face some challenges in accessing them. There are a few products in the market trying to address that, and the government's committed to becoming an emerging market, formerly from SCI. So it will take steps. So that's something that probably over time, it will take time, will dissipate. But some of the foreign premiums are high, yes. For FPT, it's about 20%. For Mobile World, at times, it's been as high as 50%. But thankfully, they're already in our portfolio. So we're over time. If we haven't addressed your questions fully, we will get back to them and we'll reply to every question. And I say we'll send a copy of the recording and make that available next week. So with that, I'd like to thank you for all your time. In these uncertain times, keep level heads, keep safe, keep close to your families and obey all the restrictions in the various jurisdictions. But we'd like to thank you for your support and for your interest, and look forward to being in communication with you again in the future. So thank you all very much for your time and for joining.